Hello folks, this is Bob Bruce from Integrity Wealth Consulting with your July 2015 Educational Economic Update. In this month's video, we'll talk about some of the major economic events from last month and give you some insight into what they might mean for you as an investor. Now, please stay tuned at the end for a required disclosure statement. Greece was again at the center of the headlines last month as the country edged ever closer to financial meltdown. On the domestic side, second quarter earnings season kicked off, giving investors a clearer picture of how companies did during the last quarter. In mid-July, Greek and European negotiators were able to hammer out a compromise that keeps Greece in the Eurozone while instituting some of the reforms that creditors would like to see. However, the wheels seem to be coming off that deal already, as both sides ultimately want very different things. Greeks want austerity relief and debt restructuring, while the creditors want further reforms. Will the deal lead to a final resolution of Greece's issues? We're not so sure. Earnings season came into focus in July, and the picture so far is just so-so. Out of 263 S&P 500 companies, earnings were up just 3.2% year over year on essentially flat revenues. The energy sector is dragging on overall earnings growth because of low oil prices, taking energy companies out. Analysts expect the S&P 500 earnings to be up 5.3% year over year and 1.2% higher revenues. The results tell us that a lot of the weakness that companies experienced in the first quarter stayed with them in the second quarter. Now, will U.S. firms be able to shake that off in the second half of the year? It's hard to say. With the European and Chinese economies still struggling with growth, the global demand picture doesn't look that strong. Domestically, the economic picture is doing reasonably well. Hiring is increasing steadily, and wage growth is edging upward. But consumer sentiment dropped in July, probably because of concerns about Greece and China. We also got our first look at second quarter gross domestic product, which showed that the economy grew at about 2.3% last quarter. While economists had predicted higher growth, it's still a vast improvement over the 0.5% that the economy grew in the first 3 months of the year. The Federal Reserve met again in July, and though no interest rate changes were announced, the central bank reiterated its intentions to raise rates this year. The Fed cited improvements in the job market in support of its intentions about future decisions and will be very contingent, those decisions, on future job gains. Are expectations baked into stocks and bonds? We don't know for certain, but the Fed has been telegraphing its rate increase for months now, so we hope that the markets really won't overreact when those rates do finally start going up. How fast will interest rates go up when they do? We don't know how fast the Fed will raise rates, but everything they've said so far is that they will move cautiously and keep an eye on the data as they go. How soon will your, say, credit card rates go up? That depends on your card, but it might happen in the very next billing period. Looking ahead, investors will be looking for earnings surprises and gauging expectations for the third quarter. The economic picture is pretty mixed right now, so investors will keep a very close eye on the data in the coming weeks. And of course, we're always keeping a close eye on the markets, and we'll update you as necessary. We do have an upcoming event we want to tell you about, very special. Newland Archinal is hosting a career transitioning webinar on Thursday, August 27th from 1 to 2 p.m. We'll be discussing how to transition financially from one job to the next. For more details, visit our events page at www.iwcnow.com. And please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation or you have any questions or concerns about what we've discussed, please give us a call at 724-940-9060. We'd be happy to talk to you. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Now, please consult your financial professional before making any investment decisions.